Thank you for joining our webinars. We're trying to do these on a more regular basis, perhaps every 2 weeks. My name is Robert Chadwick. I am one of the co-founders of Global Mortgage Group in American Mortgages. If you're not familiar with us, we are a mortgage broker based globally. Our only focus is providing U.S. mortgage financing for foreign nationals and expats. What that means is 100% of our clients are living and working abroad, but purchasing or refinancing U.S. real estate. So it's actually quite a niche product. We are able to get up to 75% financing in all 50 states if you're doing a purchase, and up to 70% refinancing if you're looking to, say, cash out, or even in some cases, even with the higher rates now, maybe still looking to reduce your interest rate. And that's sort of, well, that is the subject that we're going to be covering today. Is now the right time to be cashing out? Obviously, a lot of people, I should say pretty much everybody is aware of what's happening with interest rates. The Fed is trying to combat inflation with a rapid rise in interest rates. We haven't seen this kind of rise in rates ever, at least not since I've been in the mortgage industry, which is over 20 years. It certainly is taking an effect. But I think it also opens up a lot of opportunities that maybe people aren't seeing. And I'll address a few of those today. So if you look at the market, the real estate market in general, I think there's two, avenues of thinking. Where are interest rates going, and what is it going to do with home values, and how is it going to affect you as the real estate investor? I think to really put it in perspective, if we look at what's happening right now with JP Morgan, their commitment to buy $1 billion in US rental properties is a really good forecast of how the market is viewing U.S. real estate. U.S. real estate itself is still very under demand, meaning that there is very little inventory still on the market or available on the market, but the demand is still there, even though the interest rates are higher. And I think what also makes these times very unique is the rise in rental rates, meaning rental yields. And we're seeing this, time and time again as we're doing these loans at higher rates. When interest rates were, say, 3 or 4% for foreign nationals, the yields on the properties were for the US, they were still quite good if you look at it as globally, but they were not nearly as high as they are now. So even though interest rates themselves may be more expensive or higher, the fact that property yields are much higher, there's actually more of a yield than there was when interest rates were significantly low. I think one of the interesting things that's happened, and I guess it really depends on where you live and how your currency is affected, but one of the interesting things that has happened with this rapid rise in rates is the strength of the US dollar. The strength of the US dollar, depending on where you are in the world, has really impacted the currencies that you're living in. Some of them have been affected drastically, while others have been a little bit tapered off. One of the trends that we've actually been seeing is people requesting to pull cash out in order to actually hold on to US dollars. And there's another rise or expected rise in interest rates in December. potentially strengthening the dollar even more. And when we're seeing, or at least talking to clients about why they're cashing out, even at a higher interest rate, a lot of it is to just get access to US dollars, whether they're using it to purchase real estate back in their home country, or they're using it for just to hedge what's happening and holding on to just the US dollars. One of the, I guess because I've been in the industry for so long and I've seen these cycles, we've always stated that you date the rate and you marry the property, meaning that at some point, eventually, interest rates will go back down. We have seen the frenzy of property buying decrease. If you remember, and it wasn't that long ago, in markets that were very, very hot, you would see people outbidding each other 10, 20, sometimes even 30% or more for to get access to the property. Now, I think a lot of this was perhaps a whole FOMO event, but in general, that has cooled. Now, what will that do to prices? Obviously, as I discussed, inventory is still low. Companies such as JP Morgan are making massive investments into the rental market. It's in the US. I don't think that we're going to see a massive price correction of US real estate. However, I do think that we will see it taper off. You're not going to see the massive appreciation that you have seen over the last few years during COVID, where interest rates were low. But if you're looking at pulling cash out, and this is what this whole webinar is about, I think one of the things that people are not, I guess, seeing or they're not acting on it maybe when they should be is at some point, again, and, it really depends on where you own property. At some point, the property prices will decrease somewhat. Again, everything that's predicted is that there won't be a massive drop, but it'll be a stabilization. If you're looking to pull cash out and you want the maximum amount of cash, or if you look at loans, especially the loans that we do, have a very strong guidance or pricing structure when it comes to loan to values. If the property values are still high now, even though interest rates may be higher than what you're currently holding, if you're looking to access the cash, it's best to do it before the market starts to correct, before people are buying houses maybe below what was purchased, say, 2 years ago. And that's going to take a while for that to impact the valuations, the appraisals of the properties. But when it does, it will limit the amount of cash that you'll be able to extract. It may actually even show that your property has decreased somewhat, a little bit in value. So when people are asking, or when we have very savvy investors that are contacting us about pulling cash out, 95% of the time, it's trying to get the cash now while property values are still remaining high. Rental yields are still remaining high. So even though you may actually cash out at a higher interest rate, often you're going to wind up seeing the yield significantly better. Just to kind of give you a real life example, a couple of weeks ago, we did a bridge loan for a client that needed or wanted to have access to his cash quickly. And these bridge loans are the difference between a bridge loan rate now and say a long-term tenure rate is very minimal. So a bridge loan, we can do a transaction in a week, sometimes 2 weeks, depending on how complicated it is. These are asset-backed only. meaning that very, very limited financials, issues like credit or whatever it may be, isn't a factor in really the transaction. It's more that the property is worth X and we're willing to, or we're able to get lending up to Y. And normally it can be 70, 75%, sometimes even 80%, depending on the location and the type of property it is. But in this particular case, this client wanted cash to purchase a few properties that a seller was in distress. So he was able to take a bridge loan out. These are normally shorter tenures, but interest servicing only, say 12 to 24 months. Excuse me. 12 to 24 months, able to access the cash quickly and then do a cash purchase on the properties that he was looking to acquire. And speaking to this client who owns a significant amount of properties in the US, he's actually based in Hong Kong. His philosophy, again, is just what I said. It's not so much about what the rate is today. It's about being able to get the acquisition and being able to the acquisition at the right price, but also being able to get the refinance at the highest value where it likely would be now. Meaning that particularly because these properties had very low mortgages, his loan to value was still quite low, which made the interest rate a bit more favorable. So that just kind of gives you an idea of some of the reasons why you may be looking at pulling cash out, whether, I think it's trying to do it while the market is at the highest peak, which I think is sort of where it's at now, before there starts to be some sort of correction if you're holding on to real estate. If you're looking to purchase real estate, I mean, that's obviously still available. I know if you're in certain countries, again, where you've been impacted by the strength of the US dollar, moving currencies out and back into USD may be not advantageous right now, but it also goes to support what this webinar is about, which is the, why, perhaps that you should cash out. So we've added quite a few programs as we've seen this trend start to happen, and we're seeing more and more clients with this need. There's a very popular program that has been impacted by the rapid raise in increase of rates, which is called DSCR. DSCR is using the rental income of the property to qualify rather than actually using your financials to qualify. It's a very common sense way of underwriting a rental loan or an investment property loan. Now, this is becoming increasingly hard to qualify, not because rental yields are not surpassing what rates are, but more so it's taking time for appraisals to catch up. So if you think about it, a lot of people are looking for more stable tenants than trying to maximize yield, or a lot of people have had tenants that have been in these particular rental properties for a long time. And when we do the appraisal reports and we request a rental analysis, it's going to take time for us to see where the increase in yields have been. So, I mean, it could take up to 6 months to a year for that to catch up. So we've been able to add certain programs that have a higher threshold of DSCR, meaning that instead of a 1-for-1, meaning that, just as an example, your rent is $2,000 a month, your mortgage, property insurance, and taxes is $2,000 a month, the property will qualify. We're now finding options where it's actually there can be a negative on it. And that's allowing you to still get these DSCR loans. And there are also even options, like I had explained with the bridge loans, that it's not a factor at all in the transaction. I mean, it's certainly looked at, but it's not a factor of how you're going to qualify. It's just purely going to be based on the value of the property and the loan to value that we can receive on that. So just to kind of recap, this webinar won't be very long, but just to kind of recap, we think, and I think you're kind of seeing this across the board with many sophisticated investors, property yields are certainly increasing at a higher rate than interest rates. And if you look at the inventory shortage in the market, I think that's going to keep properties in general still at a very decent level, but you will see corrections. You will see markets that no longer are sellers markets, and perhaps you're able to get better transactions, especially if you're holding on to cash. And of course, I think we're going back to the strength of the US dollar and the fact that 100% of our clients are, living and working abroad. So the impact of holding US dollars or being able to have access to US dollars is extremely important. I think that is about it. Thank you very much for joining. We'll have a short question and answer period. So if anybody has any questions, you can put it into the chat and I will be happy to answer. Let me pull these up 1 second. Okay, somebody has a question that says, how long does it take to complete a cash out refinance? It's a very good question, and we actually hear it a lot. So there's 2 routes that you can go. One, if you're looking for a standard tenure, say, 30-year amortization, we even have 40-year amortizations, interest only, whatever it may be, you're looking at between 30 and 45 days. It really depends on where you're going to sign the mortgage. If you're going to sign the mortgage outside of the US, to say at an embassy, or if it's a country that allows an apostille, then it takes a little bit more of time because you have the transit between documents and so forth. If you're going to fly to the US and sign it, or sign it via power of attorney, so somebody is signing on your behalf in the US, then you can probably be looking at 30 days. However, again, going back to the bridge opportunity or the bridge lending opportunities, we can do a transaction in a week to 10 days. A lot of times it doesn't even require an appraisal, depending on where the property is located and what kind of property. So I think if you're looking at it in general, very quick transaction, you're probably looking at 10 days to 2 weeks to be safe. If you want a longer, more proper traditional financing, you're looking at anywhere from 30 to 45 days. Hopefully that answered your question. Okay, one more here. Okay, what are interest rates today, and what is your assumption of where they will be in the future? Well, I think everybody has seen what's happening with interest rates, and this is it's actually a very different scenario. We would get clients, say, a year ago when interest rates were really low, and say you're calling from Europe or Canada or Asia, where the borrowing rate is generally less than how the US has been, then there was always more of this education of, hey, I realize interest rates are sub 1 or sometimes even less than 1, but why are they 4% in the US when I'm seeing things much lower? We are seeing rates. It really depends on your passport and your history and so forth. But we're seeing rates from 7% up. But even though the interest rates are higher, we actually have some very creative programs such as interest only, which allows you to have a very long tenure, which is a 40-year tenure on the loan with a 10-year fixed interest only. So you have a very good outlook of how your payments are going to be over the next 10-year period. And as interest rates rise, obviously you can see the increase. I'm sorry, as rental yields rise, you can obviously see the increase in value. My thoughts on where interest rates will be, I think like everything and how the market works is we're probably looking at another year, maybe 2 years of higher interest rates. I'm hoping that's not the case. I do think perhaps if there's a change in administration in the government, then we will see I guess a different outlook of how to either fight inflation or where they need to kind of pump in the rates for the economy. Let's see where things go. I do feel that as I had mentioned before, it's about marrying the property and dating the rate. You can always acquire the property now, get into some pretty creative financing that keeps your payments still low. And then, when prices drop, or not property prices drop, when interest rates drop, then we can come in and refinance it again. Another question is, I'm not a US citizen, but I would like to know what documents I require to qualify for cash out refinancing. Again, very good question. If you're a foreign national, so you're not holding a US passport, there is no US credit required. So if you say you purchased the property with cash, or you did some sort of transaction where you would have no credit history in the US, absolutely fine with us. Again, all of our loan programs are very, very specific for the market that we cover. So you do not require any US credit. It's fantastic, and it gives us much more options if you have credit in your home country, but even that's not required. The most important thing, and because we're doing loans for borrowers all over the world, somebody from Shanghai and somebody from Sydney are providing a very similar type of documentation. So rather than going through tax returns and pay stubs and W-2s or NOAs or whatever it may be in your country, excuse me, we are using what's called an income letter. So it's a very simple way to document your income. If you're self-employed, it's from your accountant. If you're employed, it's from your employer on their letterhead. And what that states is last 2 years' income and current year to date. We do not need to go through the whole massive, administrative nightmare of providing tax returns, getting them translated, et cetera. That income letter is sufficient. So obviously the application, you're going to need to provide a couple months of bank statements, and you're going to need the income letter. And if the property, you already, you have the property and the property is being rented, the rental agreement. So it's a very, very simple and easy documentation process to go through. Another question, am I able to get pre-approved with American Mortgages first? So, that's key. Whether you're doing a purchase or a refinance or a bridge loan or whatever it may be, it's very important to be able to get pre-approved for the loan, meaning that you're going to submit all of your documents. And, as I explained, it's quite minimal. You can normally provide all of the documents, except maybe the income letter, which, could take a little bit of time, depending on, where you need to get it from. But you can actually get pre-approved or be able to supply all the documents and then get pre-approved within 24 to 72 hours. You know, our loan officers are all experts in foreign nationals and US expat loans. That's all they do. 100% of their business is this business. So as soon as they talk to you or they get their or they get your documents, or a combination of both, they will be able to tell you with pretty good certainty if your loan will go through. And I think, you know, one of the statistics that we are very, very proud of is 97% of the transactions that we submit are approved. If for some reason it's not approved, which is that, you know, that very small percentage, and, you know, there's always these outliers, it's normally not the borrower. It's normally property issues, title issues, you know, value issues, whatever it may be. So if our loan officers state that they think that, you know, you'll qualify for the loan based on a, you know, short conversation that they have with you, normally that's going to be the case. Another question, is it true that I can improve my credit score if I use cash out refinance? I possibly, I mean, it's, you know, if you're talking about a US credit score, a FICO score, and you're a US citizen, then, yeah, if you have credit or you have credit available and you pay on time, that's the key on you know, being able to improve your credit score. You know, I think it's the U.S. credit rating is kind of a, I guess, unique, where it's based on many factors. You know, one is obviously, like any credit rating agency globally, it's, you know, how are you making your payments? Are you making your payments on time? Are they late? Et cetera. And that obviously impacts the score. In the US, it's also based on available credit to a credit used. So just to make numbers simple, if your maximum credit available is $100 and you've used $99 of it, it's going to impact your score negatively, as opposed if, you know, maybe you only used $1 of that $99. Okay, let me see. Okay, which states do you offer mortgages in, and which state? And are there any restrictions? So again, a very good question. Thank you. We offer mortgages in all 50 states, meaning that regardless of where your property is, we do have a mortgage solution for that region. You know, some states, just as an example, New York may have less options than, say, California, but there certainly are a wide array of loan products that you can choose from. Excuse me. One more question. What is a bridge loan that you were discussing, and how does that work? Again, very good question. You know, I briefly touched on it during the webinar, but bridge loans now are becoming more fashionable, I should say. You know, initially, if you were to look back at bridge loans, they were used mostly by the very wealthy, and it was able to access liquidity when they needed it. Now it's used for a variety of reasons, but mainly if you're talking about cash out, it's somebody that wants cash very quickly, and it could be for a variety of reasons. You know, both good and bad. But what we do is, depending on where the property is located, which state, the values, etc., we'll get either a appraisal report, or we're going to get a what's called a BPO, which is more of a broker's professional opinion. And once we have that, we're going to be able to get a very good gauge of what the value of that property is. And normally we're able to cash out 70% on pretty much kind of flat across the board. There may be certain states or certain properties where the loan to values are restricted. But what makes these bridge loans very, very, I guess, nice or convenient these days is they're very quick. The amount of documents that you provide is very, very minimal. Financial situation of whatever you may be in is not a factor. It's going to be the property is worth X and the loan amount or the maximum loan amount you can get is Y. So hopefully that makes sense. Another question, I think this might be the final one, is what's the best way to contact you? Well, thank you for that. I was going to add that towards the end, but you can reach us at hello@americamortgages.com. You can also, if you go to our website, which is americamortgages.com, we have contacts in all the regions, whether it is the US or North America, Europe, Asia, Middle East, wherever it may be. We do have, mortgage, foreign national and US expat mortgage specialists available in all these regions. So, what makes, I guess, us unique or special or beneficial to our client base is, we operate in your time zone 24 hours a day, 7 days a week. So depending on where you're located, you're not having to stay up, talking to somebody in New York when it's 3 a.m. your time. So yeah, that's it. There's a bunch of phone numbers listed on there. Scheduling a call with a loan officer in your region is very easy. We have a 24-hour calendar, 7 days a week. It's just a matter of going on, clicking on the calendar option and choosing what is the most convenient for you, and it goes right into the process. So I think that is about it. We will wrap it up. I want to thank everybody again. Just not only for tuning in for this webinar, but being a client of American Mortgages or a potential client of American Mortgages. I think we treat every loan or every transaction with care, and we're glad to be able to offer this service, a service which we know is much needed, and a service that we are considered by far the leading experts. So again, thank you everybody for your time. I appreciate it. Any questions, feel free to email me or call me directly. You'll be able to find my information following the webinar recording that will be up on the site within a couple of days. Okay, thank you and stay safe, everyone. Bye-bye.